We are taking a live look at the numbers, and you see it right there. After flirting for weeks with a huge milestone, the Dow Jones finally broke the 20,000 barrier. It happened right at this morning's opening bell. Traders say healthy economic and jobs data combined with high consumer confidence could bode well for strong market performance in 2017. And staying with money, it is For Your Money Wednesday. Andy Mattingly is here. If you want to know how you're doing financially and what you're going to do this year, 4 numbers are something we should keep an eye on. I'm guessing that's not one of them.
Well, no, that's not one of them.
So what's the first thing we should look at?
Well, the first thing is to look at your credit score or FICO score, because that's how much you're going to be charged for any credit or loans that you take out, like the car loans and things that we were just talking about. It also impacts your insurance rates. It also could impact what type of jobs or services you can get.
We see the commercials all the time, and they always have the barometer. What is a good number?
Anything above 700 is good. Get above 750, you're probably going to get the best rates, and that's kind of the area that you want to target, is 750 to up to above 800.
Okay, so for long term, what's the number we want to keep an eye on?
It's your retirement savings rate. You know, you want that to be 10 to 15% of your income, because that retirement savings is rate. If you do that, you're going to have a much better retirement.
Okay, that's the goal to shoot for, but if we're not able to do that, how do we make up ground or get closer to that?
Well, one of the first places to start is your 401k. So if you're not at the full match there, start there. But make sure you think about it in terms of percentages, not dollar amounts. That can get daunting. So just try to increase it by 1%. And if you don't have the money, but you're saving for education expenses or other things like that, cut those back, because you can borrow for college, you cannot borrow for your retirement.
And okay, so retirement number would be long term. What do we look at short term?
Short term for almost everyone is what's your emergency savings fund. You know, so you just take the balance that's in your fund and divide it by your monthly expenses. That tells you how many months you have you can go on your emergency fund.
Okay, and what's our goal number there?
Try to get to at least 6, and once you get to 12, you can start saving for
months,
other things.
That is, yeah.
Yes, months. So that's your goal, somewhere between 6 and 12.
Is there a number that we don't think about? A lot of people would probably think about their credit score, but what's something we forget?
Well, it's your net worth, because that gives you a long-term perspective of how well you're doing. And your net worth is all of your assets, savings, cash, investments, the value of your house, and you subtract all of your debts, your car loans, your credit card, your house payments, all those, or house mortgage amount. And that number is your net worth, and you want to see it grow over time.
Do you think we should pay any attention to the market there? Obviously, if our money's in it, we want to pay attention, but you don't want people to react
to the market because you want to invest and have an investment strategy. And yes, the market going up should help your retirement funds. It should help your net worth, because you're growing everything if you've been saving.
If you've been saving. Where can people find you, Andy?
At formcu.com.
Andy Mattingly, thanks for coming in. As always,